Welcome to We Build Great Apartment Communities, the only show dedicated to the process and strategies for transforming apartment buildings to thriving communities. I am your host, John Brackett, and welcome to the show. All right, folks, welcome to another great episode of We Build Great Apartment Communities, the only place where you come to learn how to take apartment buildings and, yes, turn them into amazing communities. I have here another great guest, and today I'm really excited to get into this conversation because not only are we bringing you folks that have experience in multifamily, but in this case, we're going to talk through some transactions and use some examples with a team of people that have been able to not only venture in the ground up space, but also build a portfolio of 1,000 units in the multifamily space and do that with some very dynamic partners. And so I'm really excited to get into that with both of them and to learn how they do what they do well and also to touch on their strengths. Because I've learned in this business, when you can identify what people do really well, usually there's crossover. And so my guess is we're going to be able to talk through that. The way that that's going to map over to our audience, that's what we're going to get into. But hey, here's the great thing, that that's where all the learning nuggets are. So really excited to get into this. I am your host, John Brackett. Today I have here Chris Pomerleau and Stephen Sykes. So welcome, guys, to the show, and really excited to get into this conversation.
Yeah, appreciate for having us.
Great to be here.
Yeah, sounds great. Okay, so let's maybe share with us. Let's start off by you guys giving us a quick summary of your backgrounds, your stories, why this space, and we'll start with Chris.
Okay. Well, thanks for saying, at least giving us that guidance. Sometimes it's always confusing who's going to talk first. So I appreciate that.
Yeah.
So I was born and raised in the Omaha area, actually in Council Bluffs, Iowa. Not many people understand where that is. So I say Omaha. And many people don't even understand where Omaha is, but it's it's in the middle of the country. I was born and raised in this area here. Went to undergrad in Sioux Falls, South Dakota, and then came back to Omaha for law school, graduated school, went into the military for a couple of years. And then since 2013, I've been a practicing attorney as well as investing in real estate. And, my path here was single family homes, doing everything myself, renting it out, swinging the hammer myself. And then 2017 is when we started really building our group, which is Park Ave Capital, and investing in multifamily value add approaches. So married, 2 kids, and we continue to catch more and more traction. And now we're at just over 1,000 units and 70 million under assets under management.
Awesome, man. Awesome. Congratulations.
Thanks, man. Appreciate it.
Yeah, you're very welcome. Stephen, let's hear your story, bud. Excited.
You bet. Thanks, John, for having us. Also born in the Midwest in Oklahoma, grew up in Oregon and Texas. Roots brought me back to Omaha. Wife's family is from here. So started buying real estate in 2005 when I was out in Portland. And a chapter of my life out there was working in public sector for a couple of different municipalities, focusing on public works, environmental services, stormwater management, water resource protection, and was pursuing a graduate degree at that time. I grew up in a family around real estate. Parents have at different times in their lives been real estate agents. My mom's been a real estate agent with Keller Williams for about 30 years. So just kind of really grew up around the mindset, and they always encouraged me to look at investing. And, I got into my late 20s, 30s, and started heeding their advice, many years after they offered it. Again, bought my first house in 2005 and was just really frustrated about 7 years past that point, trying to understand how to use money to buy more. Fast forward to 2013, we moved to Omaha to be closer to our families, and in 15 started to figure out how to find and use money. Started buying multifamily at that time. Met Chris and Colin about 2017, and fast forward to today, Park Ave Capital is growing strong. I've also got a broker's license, which we can talk about at some point here on the conversation.
Sure.
I love to use sort of the mindset of being our own first best client when it comes to being an active real estate investor and licensed broker. Married, 2 kids, middle school for the kiddos. And that's sort of me in a nutshell.
Awesome, man. Awesome. Well, appreciate you guys sharing that. Great, to hear your backgrounds. So I'm going to start by talking a little bit about some of the things that we talked about earlier, which was, you were kind enough to share what you felt some of your strengths are, what you do well. And I think it was one of the things that I've learned in business, for that matter, is, when you start talking about what people do well, usually there are going to be some clues there, because those things usually are mapping over to how you're expanding your business today. And I think our audience will really benefit to see how you are able to dig in around your areas of your strengths in order to build out your enterprise, right? So, Stephen, you spoke about being a broker, and a broker in multiple states. I believe 6 states is what you discussed. And so we're going to get into that conversation. But the 2 areas that you mentioned to me were your ability to negotiate and put your company and, of course, 2 parties, or bring 2 parties together to find common ground and to be able to make a win-win, right? The other side of that too is mediation. And oftentimes those could be construed as one and the same. And many times they can also be viewed as differently. So let's start by maybe you dissecting that a little bit, just talking about how you use your broker's license in multiple states as an advantage to your firm. And then, of course, some of the negotiations that take place that could highlight your strengths.
Sure. No, thank you for that question. So first off, Cascade Commercial is the brokerage as it operates today. Chris and Colin are my partners in the brokerage. Wearing the broker's hat, obviously, as you discussed, you have a broker's license as well, or you're pursuing it. So when we wear, the broker hat, there's certain real estate commission rules, regulations, policies that have to be followed. I figured out fairly early on in my license work that it was more interesting to me to look at a deal or just look at a transaction through the lens of whether I was interested in it. I'll admit a fault that I discovered early on is that I wasn't a great servicer of single family home buyers, just really didn't turn my wheels. So I needed to find a way to use the license because I saw the strength in it. Being able to identify a deal, being able to collect a commission, and ultimately to roll that commission into equity it was the transformation that I kind of went down and learned as I went about how to use the license to my advantage and for what I was looking for. So kind of stepping back from the mediation negotiation side of things, I do like the phrase that I heard and was shared with me for any real estate agent, any real estate broker, to think of him or herself as their own best first client. And so those of us that are licensed, we're in the game of real estate for whatever reason, brought us to it. And so just being able to identify that value and that deal, and finding and placing the right buyer and seller at the same time, I'd say that's where we transition into the negotiation side of it, or to the kind of the deal making side of it, which I just enjoy. I enjoy learning. I enjoy working with people that are a lot better at it than I am, so that I can kind of see, learn, hear, be challenged, ultimately implement those techniques into deals that we work on in the future. Before we jumped on and started going live, we were kind of alluding to, Chris and I were sharing that there's a time and place, right, for the mediator. I don't always need to play that role. Sometimes our deals are just easy, smooth, but sometimes they involve, whether it's characters or emotions or, sometimes egos, sometimes those are our own, that get in the way of a deal actually finding its own resolution. And so in that role, I feel pretty comfortable stepping in and kind of understanding people to the extent that I think I do, and trying to find common ground, trying to smooth out edges, trying to sort of see around corners and strategize for how to get the deal done, sometimes despite ourselves.
Yeah, often despite ourselves.
Yeah, that's right. So I guess I'd start there in terms of response. It's just something I enjoy and that I think is valuable in our business.
Okay, awesome. So if you could share one thing that you've learned about negotiations over the last couple of years. So if you can share that one thing that you have learned allows you to put more deals together, more win-win deals together, that is, what would that one thing be that you could share with our audience?
Well, when you asked that question, my first thought went to Chris Voss's book, Never Split the Difference. I feel like that book had taught me more at the time that I needed to learn it than anything else in negotiation that I've focused on and studied. But in terms of the question specifically, okay, a couple things maybe that come to mind.
Sure.
The importance of listening, even when I think I know the answer or that I think I'm already there. The importance of listening to either a seller or a listing broker is kind of what's coming to mind. Working with owners, we come across a variety of owners in our business, right? Some are very sophisticated and their properties are incredibly lean in terms of operation. And a lot of them are not as sophisticated or not as lean, not as efficient. I'd say that listening piece or that listening skill is just paramount in those roles or in that role, in that environment, getting to know who we're dealing with and really not making any assumptions. A lot of times my instinct is to formulate an assumption and a strategy early on. I think if I could say one thing that I've learned through experience and kind of skinning my knees a number of times is wait to assume and wait to come to a strategy, wait to come to a conclusion that served me probably better than a lot of other things. So sometimes that's spending a night or two, just kind of marinating on it in my own space. Sometimes it is, drafting something as a response in a negotiated back and forth and then not sending it and just waiting on it. So I think it can take a variety of forms, but I guess just kind of my instinct is to move fast and come to assumptions quickly. And I'd say that's the one thing that I've now learned to check and pause on, give it more time.
Awesome. And that's really great feedback. And so and I appreciate you sharing that. So I'm going to transition over to Chris and, the same discussion with you, right? You have a law background, and sometimes I think that could be an advantage. And the other side of that too, I've been in deals where I've seen that be a huge disadvantage.
Yeah, I get it. I get that.
Not bad or good. It just is, right? And
I can tell you as an attorney, it's bad. I think that, look, so my background is I've been a family law attorney for 8 years. So I deal with divorce and custody and very, very happy things to deal with. But I've also been negotiating on real estate for 8 years as well. And that's kind of my experience when it comes to the lives of attorneys, if you will. I can tell you in both of those sectors, the attorneys are most often the problem. They're just in the way.
Interesting.
It just takes adding a couple letters to the end of somebody's name and they think they're special and they just get in the way. Now they have a job to do. The attorneys they're supposed to give you advice. That's what you're paying them for. But ultimately it's the client's decision that matters. So sometimes it becomes a urinating contest with the attorneys as opposed to just trying to help the deal get done. And my answer to a question you asked, Stephen, was what's something that I learned? And it was instead of me versus you, it's us versus the problem. The problem is, how do we take down this transaction, right?
Right.
How can we make sure you're pleased, I'm pleased, and everything's taken care of? Now, one of the things that I think differs me a little bit from other attorneys is that I actually have a master's in negotiation and dispute resolution. And that's not me adding more letters to the end of my name so I can flex. What I'm saying is I'm viewing these situations perhaps differently than just traditionally experienced or trained attorneys, because it's not just about who can bill a lot and upset a bunch of people. It's what can we do to figure I'm an attorney, so I welcome anybody else telling me I'm wrong.
I laugh, man. I have a couple of really great stories about that, but we'll talk,
I'd love to hear them. I'd love to hear them. But look, don't get me, I love our attorney. He's fantastic, but he also knows he's very smart, and the input he gives us on these transactions is huge for us. But he's also very good at knowing that whether it's a legal decision or a business decision, so he can give us what to do legally or maybe, but he also understands it's our job to make the business decision, and that's why it's important attorneys don't get in the way. Other than this being a situation where I just vent about attorneys, I kind of forgot the original question. I apologize.
Share your strengths, man. Your top.
I think as a strength of mine would be that background of the alternative dispute resolution and mediation and negotiating, because the attorney, it's very much the Socratic method in law school is grab a set of details, apply it to the law, and then try to figure out a way to get the right answer. Regardless, I think that the important thing is to, instead of making it an us versus them type thing, is to try to figure out a resolution that's going to work for everybody else. And I guess that is something that perhaps I look at these situations through a different lens than traditional attorneys.
Okay, great. So I appreciate the both of you providing that perspective. So what I'm going to do is I'm going to combine both of those perspectives, and we're going to talk about doing deals better, right? I think that'll be a great topic because it encompasses, I think, both of your strong suits, but also if we add an example or a deal example to that, now we have a case study that both of you can speak to very intelligently because it's something that you've already done or doing right now or involved in right now. And it'll provide some great content for our audience and also some massive learning lessons as well. So with that being said, doing deals better, okay? And everybody wants to do deals better. And I'll just really quickly give you a quick share. One of the things that I had to learn early on, very expensively, by having some deals fall apart, and in the other side of that too is doing some deals, but not executing as planned. And a lot of that came down to people management, right? Was my own ego, right? Having to really check my own ego and recognizing that, man, ego really is the enemy if you're not aware of it going into a deal. And so oftentimes what I do now, and I really love what Stephen said, is about not assuming, right? And I think assumption, man, is one of the biggest enemies we can run into when trying to put together a transaction with some kind of durable advantage attached to it, right? Otherwise, long-term, usually it falls apart somehow, especially in a market like this. And so I really could resonate with what he said. Now, with that being said, can we talk a little bit about maybe a deal that you're doing right now and use that as a case study? Okay, use that as a case study or a deal that you've completed, and we'll use, we'll talk about some of these components inside of that deal, and really just highlight how to do deals better, right? I mean, based on some of your experiences. So I'm going to start with Stephen in this case. So what deal do you want to use as a case study? And we'll dissect that deal and highlight, some of these things that we're talking about in there.
Yeah. So just to clarify, so a deal that we're working on now, or one that we closed recently,
done. So one that you've done.
Okay. So start to finish. I'm trying to think here, which would be a good one, because I'd like to throw some complexity into it.
I think Maple Park would be a great one.
Yeah, I think so too. Sure. So Maple Park is in Sioux Falls, South Dakota. It's a property. It's a deal that actually consists. It's closed, and so we're in the process of repositioning it right now. Consists of 3 different properties they're all adjacent to each other, different age build. 2 of them similar, and then one of them kind of newer townhomes. So a couple of C+ apartment buildings, and then some townhomes or townhouses, 76 units. And so part of the reason that it was interesting, or that it was an interesting process, was that we started communicating with the seller in March of 2020. So I can still remember it because we just wrapped up spring break here, and it was spring break that I was on a trip with family, exploring Tucson as an investment locale. And Chris and I started getting on the phone with the seller. And right off the bat, we saw, great, this is a sophisticated seller. Also happens to be an appraiser and a broker. has owned the properties for a long time. Chris, what was the first thing that we started kind of going back and forth on? It's one that we typically do, which is we love to ask for a seller carry and figure out if that's on the table. Oftentimes it's not. I think we get told no 99 times for every one that we get told yes, which is great. Always good to check that box early on. Right. But so context is C and B, C plus B plus property is what we're talking about.
Okay. In terms of what was the name of the apartment building or the portfolio?
Generally, we can call it the Maples.
The Maples. Okay. So let's kind of walk through this, right? So typically in a transaction, we have, the acquisition components. You have to find a deal, right? And actually identify that it's a deal before we spend more time on it. Then we have to move to the next phase, which is capitalizing the project, debt and equity, usually. And then from there, right, we have to manage it. And at some point we have to dispose of the asset. So we're going to spend time discussing the first three. So why did you like this deal? What made you pause to say, you know what, we have something here? And then take the next step of actually reaching out to the seller, or actually at that point trying to put together a purchase agreement.
I think we could start even higher level than that. Why do we even like Sioux Falls, right? A lot of times we get asked this question up front is, if people don't know where Omaha is, they certainly don't know where South Dakota or Sioux Falls is. And what really drew us to that is I actually went to undergrad there. So I went to Augustana College, which is in Sioux Falls, and I understood kind of the environment there. And, back in 08 or 09, it was the second fastest growing county behind Henderson County in Vegas before the crash. Now, unlike Henderson, it didn't get volatile because there wasn't a lot of speculation. It was just raw organic growth in the county. And so there's no state income taxes, and it's just a great place to live. And so I knew that already. And so unlike many people I know just 2.5 hours south right here in Omaha, I knew to look in an area like that. So that's what started us there in Sioux Falls generally. And then really, to be honest, it was the first large opportunity that came across our desk. There was one we passed up on for a couple of reasons. Funny thing is we came around and ended up buying that one too, just 9 months later. But we started with that one because it was the first one that came across our desk. And like Stephen said, we started with the seller carry situation, because oftentimes when we're putting these offers in, we'll put in an offer, an LOI with more than one option. Here's a flat purchase or a traditional purchase, or here's a purchase with seller carry. And so, the strategy there is we're not tricking anybody's mind here necessarily, but you're giving the seller options as opposed to yes or no. I want to buy it for X. Well, the answer to that is yes or no. If you say I'd like to buy it and I'll buy it in one of the 2 or 3 following ways, the seller isn't necessarily thinking about that fourth way, which is no. They're thinking which one of these options will fit our mold. And we already know we would buy them in all 3 ways. So just getting the seller to agree to one of those 3 is kind of how we started there.
Okay. So if I'm hearing you correctly, it puts you in a position where you're expanding the discussion for a possibility, right?
Yep.
Instead of just, hey, this is our offer. It's, hey, these are our offers, and which one do you want to have a discussion around?
Yep.
Instead of a straight yes or no.
Exactly.
Okay, beautiful. I love it, man. I think that's a great tip. A great tip. So when you're writing your LOIs and you're including multiple options in there for consideration, what's one tip that you can give our audience to create more success doing that than not? Because in many instances, you're having to rely, unless you're dealing directly with a seller, which is usually the best thing to do. You have a broker on the other side of the equation, right? Which is in many cases can be good. In some cases not so good, because, when you're presenting multiple options, now you're relying on that broker to convey what those options are. And in many cases, if those options create a delay on the commission, most of those options are going to get knocked out, with the exception of how do I get paid faster? And that's just the reality of the world that we live in. Not a bad thing. It's just a reality. And so with that being said, what's a tip or some advice that you can give based on your experience that will make that offer or those offers or that LOI stick more times than not.
I like to provide the pro forma with the LOI. You know, that's just laying it all on the table and say, look, here's why we're having trouble coming to your number. Here's our pro forma. Please show us where we're wrong. And sometimes we've learned that process because they've said, look at line item 4. This shouldn't be this. Oh, our mistake. We'll fix it and we'll revisit the offer. Or they'll say, well, your pro forma is accurate. It doesn't make any sense, but we're still going to ask for that because we're just hoping somebody from the coast come in and spends more than they should, or whatever they say, which happens a lot. Nothing against people on the coast, Mr. Brackett, but at least, well, people like to come in because look, the cap rates here are certainly more attractive than many other places in the Midwest. It can be attractive. So you have people from out of state who are coming in and offering more than they typically would because the cap rate's so attractive and they'll pay more. And by the way, as a seller, you have the right to do that. You can ask for whatever you want. If someone's willing to pay it, then let's do it.
I have a story about that too. Actually, we're working through a deal right now that I'm getting ready to buy. And I think the buyer did the same thing, right? Out of state buyer came in, paid a lot more. And, kind of interesting, right? Because most people don't think that cap rate is a measure of risk. So if that market really is a 7 cap and you're offering a 6, have you really considered, the impact of that tenant profile? Because the tenant profile reflects a 7 cap. In many cases, like an 8 cap, right? But they're trying to get a 7. And so now you bump that down to 6 and you don't understand that tenant profile because that's really what you're paying for.
Yeah.
Right. Is you're paying for that tenant profile and your ability to be able to manage through that process and produce a cash flow stream equivalent to a 7% return if you bought all cash and not working out like that. Right. So I have some great stories around that, man. So I really appreciate you sharing that because, oftentimes I don't think we think through that properly. And I know I've been guilty of that. Thankfully, not to the extent that it's cost me millions of dollars, but I really do appreciate you sharing that perspective. And so with that being said, I'm going to shift over to Chris because I can tell he's just waiting to add to that. I can see, man, the thought process in your eyes. So what would you like to share?
No, that's great. Well, I'm glad, Chris, that you mentioned presenting the pro forma at the offer, because that's kind of where my thinking was too. What you probably saw in my eyes was like, how do we make the best first right impression? Because a lot of times, earlier on, I would throw out a low ball just to see if somebody's, ready, desperate, or, doesn't know any better. On the selling side, of course, we can't afford to do that. It's not smart or prudent to do it that way. But that's one of the advantages of offering with the structure that Chris described, where you've got kind of sort of a menu of ways to do this. Is the straight cash offer, it still can't be offensive. We don't want to put anybody in a bad light or set anybody on a defensive structure or perspective when we give them an offer. So presenting that pro forma, presenting that walkthrough, and we're even starting to put together the kind of the systems and the structure to sort of do like a video explanation of that. Like, let's walk through our pro forma. Here's what we see. So it's more than just a piece of paper, or it's more than just a spreadsheet with a written explanation. So actually walking through it with sort of a video, almost like an interview, and like what we're doing right now, is a way to say, here's our assumptions and here's what we see, and tell us if we're wrong. And in the meantime, here's a few ways we can approach it. So I think another part of that, though, at the outset is understanding seller motivation, right? Trying to figure out whether there's a broker on their side, or hopefully we can deal just with the owner, because you're right. I agree. That's always better. But trying to figure out what that motivation is that we can turn into positive leverage that's going to get the deal done. Is it timing? Is it price? Is it terms? Is it time to close? Is it, who knows what kind of structure of debt they have? Of course, as you know, we're seeing a lot of deals now where people have just come back and gotten agency debt in the last 2 or 3 years. And now those properties are being marketed. Well, depending on the situation, the buyer, the structure, the capital, the investors, that could be a complicated buy. So
100%.
just trying to understand those pieces of it, I think, are the kind of what goes along with what Chris described as the sort of the explanation for how we get to our number. And then here's the numbers we can choose.
I really appreciate you sharing it. So let's kind of dissect the menu that you're typically proposing around. Right now, I know it's deal specific, and that often will change. But I'm sure at this point that you have maybe a carved out McDonald's menu that you typically like to propose. And so, what does that normally entail? Right? Is it cash, seller carry, and then what would the third option be, or the fourth or the fifth? What do you typically include in your menu of offers? Hey, I like that, your menu of offers.
Nice.
Yeah, that's great. I mean, I'll start off. Chris, pick up too. But what we want to offer is a straight purchase. We assume, or we found out at this point, that there's an opportunity. We don't need to assume any debt. We can do a straight cash offer and purchase. Traditionally, that number is below asking price, if there is one, or if there's a whisper, it's a little bit more aggressive than that. The seller carry route can sometimes even be sweeter than the asking price, depending on how sweet the seller carry is. So once we can understand kind of where where we're going to find that common ground, we like to sort of set the bookends. I guess we can call it that. So we've got a cash offer, straight purchase. We've got a seller carry that's going to have a very attractive purchase price. And that's a way for us to get a sense of what are the seller's motivations? Are they even open to the seller carry option? And if they are, and they grab onto that sweeter price with the seller carry, which is great for us, we're also thinking, now we're talking about terms. And Chris alluded to this earlier. If it's going to be their price, it's going to be our terms. So once we can determine a price range and a structure, then we can start, this is the way I think about it anyway, Chris, is that we can start to get into leveraging on terms. And there's also maybe a way to, if we start here and we get some traction with a seller carry at a higher price, we can also look at, okay, well, here's some terms that actually make this better for us, and maybe even end up decreasing the price a little bit, or the cash out of pocket at the front end. So Chris, what would you add to that?
Oh man, I mean, the quick and dirty for you is, we offer our price, our value. So on this deal, I'll tell you right now what it was. We offered $5 million. He wanted 5.9. We offered $5 million, but we also said, if you don't want it at $5 million, we'll give you 5.8, but you need to do a $500,000 seller carry at interest only for 6 years at the interest of 5%. And he bit that. So,
okay. So let me pause on that. So I appreciate you sharing that, right? So you just described the structure.
Yep.
Something that you proposed that the seller was agreeable to. Yep. So what was their motivation, or what was the seller's motivation? Because let me just kind of clarify that, okay? When we talk about motivation, most of the time, to your point, Stephen, we get into that discussion, and motivation to many people reflects it's timing. But the seller, usually the reason why they want their timing is important, because there's some other factor behind the timing requirement that's really motivating them to want to sell. And so I often try to figure out what's behind the timing. Why do you want to close? Why do you want to close sooner, right? I mean, what is the driving force behind that? Because in many cases, I also include in my offers using real estate as a down payment to also open up potential discussions if one of the options is them wanting to trade into other properties. Okay. So what was the motivation here? And can you maybe just talk through the reasoning behind the structure?
The structure of why they agreed to it, or the structure of why we offered it? I can tell you one.
No, why they agreed to it and what the structure looked like.
Well, I think that, I don't want to put the words in the seller's mouth, but we know for certain that this seller was a part of a partnership that necessarily wasn't seeing eye to eye on the overall business plan.
Yeah.
So the seller wanted to kind of branch off on his own and own his own items just himself. And the fact that they built half the complex themselves just 12 years ago means they were going to, even though they were doing a seller carry for $500,000, they were going to still make a substantial amount of money that would allow him to not only 1031 some of that money, a large portion, but also have that built-in COVID feeling. By the way, this happened to be like COVID. So this gentleman's older. I can only guess that he was like, who knows what's going to happen with the world? These guys are willing to pay me 5% on my money of $500K guaranteed for 6 months, for 6 years, while I can take the other millions over here and 1031 into something else. So my guess would be that he felt that diversification of his proceeds would actually allow him to feel much more confident in that decision. That's my guess anyway.
Right. Yeah.
And so the 500K was huge for us because you didn't really ask this, but the reason it's beneficial is that it was so easy to explain to our investors, because now instead of raising 1.5 million, I give this speech all the time. Yeah, $100,000 investor on a $1.5 million raise owns 6.67%. But now that we raised $500,000 by way of the seller carry, the overall equity raise was only $1 million. So that same $100,000 investor is now a 10% owner. So we've built in an extra amount of equity for each investor just in the negotiation process, which is huge for us. And it also kicks up the cash on cash.
Yeah, no, I like that. I guess that's a pretty good way of presenting the benefit, right? Is now you take on more ownership
right away.
But here's the other side of that too, though. On your end, being that you negotiated the debt, right, as part of the purchase, do you take on more ownership as well as a general partner?
Do we take on the what? I'm sorry.
Are you taking on more equity as a general partner for negotiating that structure? I mean, I get the dilution aspect of it, right?
Yep.
But do you, because of the fact that you negotiated that structure, are you also asking for more equity as part of the deal?
No, I get this question because I can tell you it was the first.
The point you're being is there's value created there, right? So, I mean,
there is for sure. I think that we leveraged it basically to just prove to our investors it's worth their time. And some of these investors, it was their first time because some of these investors are from the Sioux Falls area. Not many people had participated in syndications. And so we use that to justify to them, even though overall it should be understood by experienced LPs. But we use this to justify our asset management fees and our acquisition fee. Overall, we would have loved to have it be a $500,000 loan just to the GP, because that would have upped our LP position as a GP and we would have had way more equity. But legally, we weren't able to do that because they wanted to carry the seller, of course, they wanted to be on the title in second position. And so the loan had to be to the owning entity. So we benefited the same, the GP benefited the same as the LP would have. It is really just a feather in our cap in our webinars, in our explanations to our investors that their $100,000 is now going that much further. And believe it or not, we've been able to do this many times. So we benefited just as much as our LPs.
Okay, cool. Okay, so let me just kind of walk us through this. So we talked a little bit about the acquisition, what made you stop, right, to take a look at this property further and then proceed with negotiations. Then you just were able to discuss or talk us through the capital structure, with debt and equity, and how you're able to come to that decision with the seller and why it benefited the seller. But also, in your case, which I really love, man, is your ability to explain how it also was an advantage to your investors, right? In this case, it gave them greater ownership, which I really like. I think that's a great selling proposition. Okay, so now with that said, it sounds like you guys have already taken title to this property. You've owned it for quite some time. Was it a reposition play or what was the business plan?
Yeah, so
we're going to talk about management.
We'll just jump in here too. It's certainly was a reposition. So I mentioned at the outset when I was describing the property, there's 3 different buildings, 3 different pieces of this acquisition. One couple of the buildings, the 2 C+ buildings were built, 80s, early 90s. And then there's the townhouse, which is the newer product that Chris alluded to, the newest part of the construction. So to some degree also, you've got, different tenant profiles for each of those buildings. The reposition play really kind of looks at each building. What does each building need? Some of it is common areas. A lot of it is unit turns on the 2 older buildings, updating finishes, bringing those countertops, fixtures, sinks, colors, floorings, all to a standard that we want to see them at, to push them to a B minus, to push them to a B. So over on the townhomes, though, it's a different story. Those are newer build, nicer construction, much larger spaces, can rent at a higher per square foot rate. We're also, as we're going through and developing our operating plan and our reposition plan, we find out really close to closing that there's going to be a new distribution facility for Amazon in the area. So it was just a big bump for our investors, for our own sort of energy about the project. We'll talk a little bit about property management, I'm sure, but we've partnered with an excellent property manager in that area that knows how to dial directly down to a C property, and they know how to manage an A property as well. So, Chris, what would you add to that as far as the reposition play?
Yeah, I mean, so that is Park Ave, our group. That is all we do is value add, and what makes us a little different. But I know that you'll understand this. But we on the back end, when we don't sell, so we're buy and hold, and that's beneficial to our investors because we refinance, we get back 90 to 100% of our original capital. Everyone does. And then everyone stays on as owners and receives indefinite cash flow thereafter. Now, we have successfully received 100% of our money 43 times. So 43 times we've gone full cycle, and our full cycle would be the refinance. So that's our goal, right? So that's how, the reason I say that is because that's the lens through which we look at every single investment. Is not how can we just slap some lipstick on a pig and sell it for more in 3 years. It's literally, is this something we're going to want to own in 15 years? And so some of the ways we up that NOI is by just making it a better place. And that can be done through like water conservation. We already had a group come in there and change out all the toilets, all the faucets, and just that change right there raise the value of the property. I think, don't the exact numbers, but I think it's right around $350,000, give or take, on the NOI, just cutting that water bill. And that happened within a month. So I'm just naming some like outliers that everyone knows: raise income, cut expenses. But some of the ways we're doing this is just to simply, like Stephen alluded to, is instead of making them 2008 and 1993 aesthetics, we're making it 2021 aesthetics. And so we're able to bump the rent. Right. There was no bill back. So the owner was paying water, sewer, gas. So now we're building back for that. The water conservation, we actually added a complete full unit in place where the old workout room used to be because no one used the workout room. So those are some unique aspects that we try to add. We're adding solar into some of our stuff throughout the country now as well. It didn't work as well in that specific position, but so those are some outliers or some unique perspectives on how we change the NOI there.
Okay, awesome, and I appreciate you sharing that. So I'm gonna pivot now to management, and we're gonna speak about management, maybe how you execute on your business plan. What were some of the challenges, or maybe some of the positives at this point? That when you look back, you can say, hey, these are some of the biggest lessons that I've learned, right, to share with our audience. What would that be? So when it comes to property management, how long have you owned this asset now?
8-9 months.
Yeah. Oh, great. So it's fairly recent. So there should be, this should be pretty fresh in your head, and all of those either the positives or some of the challenges should be pretty fresh as well. So when you look back on this purchase, what were maybe 3 things that you felt you did really well, and maybe 3 things that if you could do over again, you would?
I'd say kind of just jumping into the management piece. If we keep that umbrella, during our interview process with different management companies, the management company that we ended up going with stood out for a variety of reasons. And some of them were identifiable early on, and others were more subtle. And I just jumped to the subtle piece was more about the staffing in general, and the caliber of staff that they have wasn't immediately apparent, but there was some gut instinct that, okay, we're working with folks that really know what they're doing. And then, like any of us do when we're looking at a property, interviewing management, we want to understand what's their expectation for the property and does it align with ours? Are we pie in the sky? Not anymore. Earlier in my career, I would often find myself there, but we need to make sure that we have the same expectations and the same understanding of the market. So that's on us to understand the market that they're actually in, but to make sure that we think collectively that they can implement the business plan and that we can achieve it. So part of it is pushing, and part of it's receiving, pushing them to say, this is what we want, and can we get there? And are these the right steps? Are these implementable over our timeline? And then the receiving side of that is, okay, if our CapEx budget's, slightly off, we're going to take that feedback from management. They're going to correct us on, well, here's local pricing on this particular item. Sure, it might be that way where you are in Omaha, but up here it's slightly different. We're going to tweak that and adjust it. So I think we did a really good job of that early on, just really vetting cost, expectations, timeline. And we're tracking to that now. We are 9 months in, so we're still fairly early on to the full reposition. But yeah, that was definitely something that I think we did a good job in selecting this management company.
Awesome. And so if you could do one or two things over again, now that you're able to look back with 2020 vision, what would you do differently, or what would you have done differently rather?
I had a fantastic broker help me through this process named Stephen Sykes. So I don't know if there was anything to change at all, but the only thing I wish I could change is that we closed on it sooner. I mean, it took a long time. Now, COVID didn't help because, we started negotiating in March, right? So, heck, I had my second child on March 10th. We closed a syndication in Kansas City on March 10th. And then within a couple of weeks, they're closing hospitals and we're putting an offer on a Sioux Falls deal. And so that could have been the reason that kind of drug on longer than we wanted it to. I wish we'd have owned it sooner only because of doing so well. But I just don't really know. Everything went, knock on wood, exactly like I wanted to. And it has thus far. So I'm really sorry to do this to you, but at this time, I don't have anything I'd change.
Well, man, you're not doing it to me. That just means you're executing, which is a great thing, right?
Yeah. I would like to think so. Yes.
Yeah. That's a really good thing. Well, hey guys, we are at the end of our show, and I want to thank you for being on, man. This has been, I think, a great conversation. It's also, I think, been great for our audience because you've been able to walk them through a transaction using one of your deals as a case study and pointing out, how you've been able to approach these deals through a couple different perspectives. And so I'm going to summarize, right? This show evolved into a discussion about doing better deals. And we were able to use each of your strengths to kind of talk through that discussion. From the viewpoint of Stephen Sykes, right? Broker in 6 different states, which is pretty awesome. There's a big advantage there. But being able to leverage negotiations as an ability to be able to do better deals, and approaching it from a viewpoint of putting together win-win deals and really having more of a mediator approach, which I really like. And then Chris, you as well, man, being able to leverage your background as an attorney, but in this particular case, leveraging your strengths as well to be able to put better deals together. And you said something that I really like, which is, hey, when I'm in a position where I feel my partner can step in and create an advantage for us, you raise your hand and you have no problem stepping aside so that can happen. And I think that's a huge strength, right? Because why have partners, man, if you're going to try to do everything yourself?
Right. I call on Stephen to do that often. Stephen's good at what he does. That's for sure.
Yeah. Sounds that way. Now, with that said, now we're going to get into the LOI component of being able to do better deals. So when you guys write your LOIs, you found it an advantage to be able to present a menu of offers, which I think is pretty cool. It sounds like, inside of this menu, there's a cash option, there's a seller carry. In mine, the third one is being able to incorporate, real estate into my deals as a down payment for the reasons why we mentioned, which is why I like buying a lot of small deals because I always leverage those and the ability to put other deals together. I don't mind buying small deals for that reason. They've been able to work to my advantage. In your case, you spoke about that. So those are your 3 options. And the other thing you talked about was making the best first right impression. Man, I really like that. That's like a golden nugget. And how you do that, I think you're doing that, through your offers, but also incorporating a pro forma in there, right? Incorporating a pro forma in there really as a discussion point. And I think that does make a really good impression. how you guys do that. You did it through video in your presentations. I thought that was pretty cool. Never really heard that before, but I can see how that could be an advantage. And then really understanding what the seller motivations are, right, in order to be able to put this together. So, guys, that is the summary. What did I leave out? Because there's a lot more in there, but I thought at a very high level, just to touch on the key points. Again, pretty cool stuff, man. So I want to thank you guys for being a part of this and sharing all those great nuggets with our audience. With that being said, before I get into having you share how people can get in touch with you, I'd like to ask you this question, since I've been asking questions for 40 minutes now. What is the one question that you guys have of me that you think could add some value to your audience?
Well, let me jump in first while I think of another second best question. But using smaller properties as collateral, that's the second time you've said it, and I meant to ask you when you first mentioned it. You're making an offer, and inclusive in your offer is an offer to trade, or essentially include in your offer a smaller multifamily property. Is that how you mean that?
100%. It doesn't matter if it's a family, single family, doesn't matter. That's why I still buy those properties for that reason.
Oh, that's fantastic. I've never heard of that. I think that's a great idea.
Yeah. I mean, when you think about it, most commercial sellers are selling to trade into something, or they're under a time constraint based on their operating agreement to get out of a deal, right? Or
Sure.
it's a contentious partnership, or they're just not performing. Those are usually the reasons that I've seen in my career. And so I like incorporating, real estate as a down payment, because, all you're doing is trading equity, right? And sometimes, they can move into that position for whatever reason, and, it creates some discussion. So it's helped me, and that was passed on to me by, a mentor of mine, real good guy. He owns, I think now maybe 3 million square feet of real estate throughout the nation, mostly industrial properties at this point. And, he trades a lot, he exchanges a lot. And that's something that has, if I can point to one thing, I think that creates more discussions than anything else. So that has kind of helped me.
I would like to feel, sorry, go ahead.
Not that all of those deals come together that way, but it opens up just more discussions, right? And so I've always liked that.
That's great.
Yeah, if I had to have one question from you, it would be probably an hour long of just, I'd love to hear you break down all of those experiences and how you use that to your advantage. That's super intriguing. I think that's an awesome opportunity there.
Yeah, no worries, man. I'm happy to share how I can. If you want to set up another call after this, happy to do that. Tomorrow I'm meeting with a seller that I'm likely going to purchase this property subject to the underlying debt, right? And the reason why, there's some issues that I have to correct, but that's why I'm buying it this way. But 30-year fixed financing, right? 2.5%, 30-year fixed. And so for me, I'm buying this because I look at it as there's not a lot of upside, but you can solve a lot of problems when you have that kind of debt on a property, right?
Mm-hmm.
Now I'm going to have to spend, I don't really know how much yet, to cure some of these issues and to get an occupancy cert on this property. But this will be a perfect property to present in offers, because that is assumable. And the way that I structure it will be assumable, because I'm going to hold it in a trust. And so again, it's a great deal to present to another prospective seller, right? And this is a $1.1 million property, 3,000 square feet with a guest house, really nice property. And it would be a great presentation to be able to put together a better deal and trade up on just a better quality asset. So
it's awesome.
This would be a good case study.
It would be.
Absolutely.
Yeah.
I like it. It's the chessboard of trading up. I love it.
Yeah, that's, and, if for some reason we hold it, we'll, over a 10, 12-year period, which obviously we wouldn't really have a lot of room to sell this property in the first 24 months, especially in this market. But, the net effect of doing that, and I learned this from another buddy, of course, we have a target, right? So at the end of that 10, 12 years, we have maybe $400,000 in principal buy down, because the interest rate is so low. So for me, that's like a no-brainer. right? Where else am I going to create that kind of bank account? Can't do it in the bank today.
Right. No, that's phenomenal. That's awesome.
Yeah. So the return on equity, looking at it from that perspective, is massive, right? You just have to have patience and at least understand that as a finance person.
That's great.
Yeah.
Well, good luck on that. That's great. Good for you.
Yeah, I really appreciate it.
Yeah.
But yeah, happy to help any way that I can. Not sure that I can, but I'm happy to try.
Well, I'm sure we could pick your brain.
Yeah.
Love to follow up on
really
that.
Excited to learn from you guys as well. I want to thank you for being on. Based on this conversation, there is just a massive amount, I can learn from you guys. And so of that, I want to thank you. The information that you shared with our audience as well has been really, really good. And so I'm sure there are a lot of folks out there who've been able to benefit. And, frankly, what you've been able to share, that information is implementable, man, right away. And I think that's the kind of stuff that when you're on a show like this and you're getting information that you can literally, once you get off the show, start implementing. I always say that there are millions of dollars of nuggets in that content, right? And so for that, just want to thank you guys for being on and sharing that. Now, what is the best way for people to find you folks out there?
We have a website, parkaveinvest.com. You can find us on LinkedIn. Chris or Stephen or Colin at parkaveinvesting.com is our email. If you go to our website, you'll see a number of blogs and podcasts we've been on, but that's probably the easiest way, LinkedIn or through our website for sure. Unless, Stephen, I don't know if you want to give out your cell phone number or not. It's up to you.
Oh, not this time.
Careful.
No, I'm kidding. Right. No, that is the best way. I'm happy to respond. Any questions anybody has, just get in touch.
Okay, awesome, guys. Hey, well, I want to thank you again for being on. Thanks for being just great guests and sharing your experiences. And I want to wish you continued success. And I can't wait to have another conversation with you folks when you have 5,000 units.
Oh, awesome. Love it. No, we'll be picking
thanks,
your
John,
brain
for having
soon.
us.
Thanks for having us on.
Anytime, man. Thank you so much. Appreciate it. Clarity of purpose creates our greatest competitive advantage. When we transform apartment buildings to thriving communities, we improve how people live and create assets with high profit margins. Don't forget to subscribe, like, and share this up with a friend. I'm John Brackett, bringing you things you can implement right away.